Now, I felt from the beginning that concept was wrong for many reasons, but two big conceptual reasons. One is I just knew too many people who had obvious trading skill. And it wasn't just they were lucky, they just did too many trades for too long and had results that were too lopsided to be explained in a probabilistic sense that, oh, if you have enough traders, some will get those results. No, I don't care how many you can have 10 billion traders, you're not going to get those results, So clearly something is going on here. So I'll give you, in fact, I wrote a book, my next to last book, and it was a non-market, was a book called Market Sense and Nonsense. And in Market Sense and Nonsense, which I go through a whole bunch of, each chapter deals with a different set of, different subject of misconceptions. One long chapter, probably I think the longest chapter in the book is debunking the efficient market hypothesis. And one of the things I do in there is I give a number of examples of just come on, in no sane world could this happen if the markets were efficient. I mean, there's so many. So let's say take something like Countrywide. Countrywide, if you had to pick a company that was the worst of the worst, I mean, I don't know who I would pick, in this whole 2008 financial meltdown, and companies that participated, in my mind, they should, the heads of these companies should have ended up in jail, but they walked away with hundreds of millions of dollars, unfortunately. But no one was worse than Countrywide. And Countrywide literally proved everything. You could not, their people were instructed to give mortgages. If they turned down a mortgage for any reason, like just because a person didn't have a job or income or anything else and was asking for a large amount of money, they would be told to find a way to do it. And that was because Countrywide then sold off they didn't have to keep it. They didn't have to worry about people repaying. They sold it off to Wall Street, who didn't care because they repackaged them and sold them off to investors who didn't know any better. Or I should say, not who didn't know any better, who were relying on the rating agencies, who were either themselves incredibly dumb or compromised and looked the other way and then therefore are guilty in that sense. But they could only plead either stupidity or malfeasance. There's really no other way of explaining it. But in any case, going back to the origin type of company, the ones who produced these really, truly terrible mortgages that just had a very, very poor chance of being repaid, and did so knowingly and had a corporate culture where negligence was encouraged. Nobody, I think, could be worse than Countrywide. And that now, I just try to get people a sense of how bad this company was. So now a company like Countrywide was depending totally on this housing bubble going on. Because as long as the housing bubble goes on, prices are going up, and no matter how incapable people are of paying back a mortgage that you give the mortgage to, as long as housing prices go up more than they have to pay back, it kind of sort of self-sustains. Yet if that stops, a company like Countrywide is going to be in a whole bunch of trouble, right? Not only did it stop, but you can look at something like delinquencies. And delinquencies were sort of, during the housing bubble, were very low at about 5%. And then they start going up, and they go up and they go up, and they went from 5% to 10%. So mortgage delinquencies actually doubled. Now, this should have been like, mortgage delinquencies going up is the type of thing that should be a screaming cautionary note for Countrywide being subject to collapse. And if you look at the chart, and this is why I say, if you tell me the market price is right, you got to be just blind. And I'm just mentioning, I'm going through detail in one example, but there's tons of cases like this. So what did Countrywide stock do? As delinquencies went double from 5 to 10%, it actually went up to a new record high. The record high occurred after delinquencies had doubled, and about a month after the record high, the stock collapsed. It didn't stop collapsing until went out, until the company went out of business. So how could you can't explain that by the market price being right.